Forex. Is this the card that's right for you? Okay, this is the part where I'm supposed to roll you the cool, like, sick intro with the Lamborghinis and stuff like that, but due to budget cuts and because I'm afraid of DMCA, please accept this alternative that I had to pay for. Well, not really pay for, I made it myself. Okay, now that I have your attention, come here really quick. I just gotta tell you this. I'm not your financial advisor. I'm not a broker dealer. I don't trade Forex anymore. I don't really touch the stuff. This industry involves a lot of risk, and anything you do, the sole responsibility falls upon you as you are a functioning adult or whatever. Like you make your own decisions, and I have no influence on that whatsoever. Everything I talk about is just an opinion, and everything I also talk about, there are some more obscure rules that are out there that I'm aware of, and it is important to research everything, especially if you are considering trying this out, even in the slightest. I would say consult someone that's actually more professionally qualified than some guy on YouTube. Okay, because everybody's always on this whole positive kick and everything, and I know what you guys were looking at earlier, but here, let's continue that for a little bit before I bring you a little bit down to earth. So number one, the low barrier to entry. Now, a lot of people keep saying that oh, they don't have enough money to invest in these stocks, and if you look at Amazon, Tesla, Google, all these solid companies, they are really expensive. Then you look at Forex, and they say, oh look, you can invest as little as $1. Okay, to Forex's credit, just a little bit, they were essentially one of the originators of taking like sort of fractional positions, because if you look at how they're structured in general, because originally you were only allowed to take like one full lot, or the equivalent of $100,000, and obviously your leverage would help you get up to there, because a lot of people that started back in the day didn't have like $100,000 to take the full lot themselves, and they'd also group positions together. But that's besides the point. That's histories and mechanics and stuff like that. So originally you were only able to take one full lot. Then they sliced that to a tenth of that. I believe it's called the minis. So the minis is about a tenth of that, or $10,000 worth. And then came in the micros, and some brokerages will allow you to take like I don't know if it's sub micro or something like that, but micros in general just refer to anything below 10,000. And you're able to set the amounts, like you want 3,000 units off of Owanda on USD CAD, that sort of situation. It was in a great way to allow people to still trade and to kind of partake in these moves, and that I believe deserves some credence. The second thing is that the market is open 24/6. So from 5 p.m. on Sunday to 5 p.m. on Friday, you can trade throughout that. There's like literally no downtime. There's some brokerages that have like intraday, like 15-minute server resets or whatever the hell they want to say it, or call it, or whatever. But essentially it is a 24-hour market, 6 days a week. The third thing is there's high liquidity, meaning that you're never gonna essentially you're not gonna take out personal levels. I can almost guarantee you that when you sell something, you're not going to literally like rock the price down to the core or anything like that, or shoot the price up. It's really, really difficult to do that, and you'd essentially have to be in collusion or in some sort of like investment bank colluding with others to essentially try to manipulate the price. The fourth one is you'll virtually have low to no fees. Most brokerages don't essentially have fees, but there's a little nuance to that I will talk about later. And my last and fifth point is that automation is very simplified on this, actually. They essentially have like an EA wizard, or like expert advisor, as they would put it. And essentially what you can do is you can build your own sort of algorithms. It's not super complex. It's very basic, like if you see a MACD cross and stuff like that, then if you have this type of position, trail this position. It's more sophisticated than what normal like equity or futures, any of those other brokerage platforms give you, which is very cool, actually. They have an entire library section to where people have an array and different variety of strategies that you guys can try and look and backtest and all that sort of stuff. Excellent. Now comes my favorite part, the cons. I'm a little bit more happy about this than I should be, but this is actually my favorite part. From the pros to the cons, unfortunately, the low barrier of entry makes a second appearance in the con category. One would ask, well, wouldn't a low barrier of entry kind of allow more people to do it and allow everybody to be equal and, essentially be able to trade in Forex and stuff like that? Yes, actually. Yeah, it would allow anybody and everybody to essentially trade it, but here's the problem though. How many of them are actually good? On top of that, if everybody's doing it, why aren't they all successful? Why are we not like all filthy stupid rich? And the answer to that is because the low barrier is actually a trap. It's a essentially it's giving you a drug. If anybody knows anything about addiction, they know that it starts with just that one little hit, that one little take, and then mentally you're just like scratching at it constantly. And essentially gambling's a really bad one because most forex brokerages back in the day when I saw it was like invest as little as $1, invest as little as like $1 or $10, or I think it's like $100 minimum nowadays. You put in that 100, you make $20, or you double that account. Then you're just like, oh, if I could do this with this amount, how much more can I do with this? And then you put in more, and then you lose that, and then you're just like, oh, I just had a bad streak, or whatever. You try to convince yourself out of it. You put more, and so forth. It's not a good snowball to be under, and honestly, like it's a very the low barrier is an entrapment for people who are in a desperate money situation, and I'm not a very big advocate of that. Second, it's highly manipulated, especially at the institutional level, and they essentially do like teamed up collusions and stuff like that. You literally just have to Google Forex, institutional manipulation and collusion. Just Google that, and you'll see like a couple articles referencing people at Citibank and all these other big banks and stuff like that. But essentially, they work together to either defend a price, maintain a price until someone else gets in, and then they just like they either pull their order or they flick it the other way. There's no fair pricing to that. That's 100% manipulation. The next would be there's no visible tape per se. There's some brokerages that do give you, like forex brokerages that do give you somewhat of a tape or time and sales, but the data that you get from that is mostly internal data. It's not actually what they would get like from an interbank tape or anything like that, where it's all like essentially consolidated. And the reason why that's important is because let's just say that if I was to jump into a pool and do a cannonball, I would create a big splash. And if you were unaware that I did this, you're going to get hit with water. So that's the best way I can kind of analogize it. All right, the fourth one is a little bit tricky, so I might have to go on a web browser to show you this. But essentially, you can get on the wrong side of carry interest, and most equity players will know about this, especially if they're short players. You will have to pay a carry rate overnight, and this is a everyday situation. There are some cases where you'll get positive interest. It depends on what the difference in the country's interest rates are and everything, but essentially you will likely always be put on the worst end of this, and the position will cost you every single day that you have that position on. The fifth one I kind of rolled up all together in one package because it's concerning one entity, and that is your broker. Your broker will have very lax regulations, not like stocks or anything like that, or options or any of the other complex derivatives, right? Forex, because of the way it is and everything, like most of these brokers are either domiciled in the UK, Cyprus, Greece, or any place outside of the US, and they'll say it's because of the CFDs and stuff like that, but it's not. They're shady. Like there are a lot of shady brokerages because the barrier of entry is just so low. And some of the practices they can do is that because it's broker dictated pricing, they make the spread. And what I mean by that is that like if you look at some of the pairs, and I'm going to use USD CAD for example, you'll see something between like 1.2 to about probably 3, maybe more, I don't know, but 1.2 to 3, relatively around there. Now what that means is that there's going to be a 3 pip spread in between that whatever the current spot price is, and that little markup is the brokerage's profit. Now there is certain scenarios, like with Owanda, during certain news events, they will jack that, like, 1.2 to 3 or whatever, up to 20, up to 50, depending on how volatile an event they think is going to happen. And sure enough, if you have a stop there, you'll get filled right there. Even though it doesn't quote that price, they will auto liquidate you and give you the worst price possible. There is no recourse that you can essentially go after with them, because they have all the power and they have all the money. Well, they have all your money now. And yeah, I'm not a huge advocate of Forex, because the more and more I learned about it, the less and less inclined I liked it. And if you guys remember the Swiss, I believe the Swiss National Bank or whatever, they decided to stop pegging their currency, and some tickers just dropped, like, 1,000 pips overnight, or some just jumped up 1,000 pips over, right? If you were one of the smart people in the room and actually caught the right side of that thing, well, guess what? Owanda put out a statement saying, well, we understand that this was actually a black swan event, and even if you got lucky, even if you predicted this or whatever, thank you for your earnings, but we will give you, we'll basically break the trade on your side, but thank you for that earnings. That will be used, allegedly, to cover the losses of everybody else who actually were on the wrong side of that trade. I just want to highlight this point really quickly, but let's put that into perspective right now from the broker's point of view. You have like a small group of 10 or whatever, right? And most traders, they make money off of the volatility and the movement of in price, the movement in price and everything, right? So, and the currency difference and all that sort of stuff. So they make their money off of that. You as the broker make money based on transactions. Now, if these people only do, maybe a few dozen transactions here, maybe they're swing traders, maybe they only like do a dozen transactions throughout the year, maybe less or whatever, right? You're not making very much money off those guys. But you are making a lot more money off the people who are trying to chase the day trading dream. And let's say there's like a couple thousand of those guys. So group of 10 versus a couple thousand these guys. It's not a very difficult decision, especially if you know you can get away with screwing some of your bigger clients, saying, oh, well, you know how the game is or whatever, right? To keep everybody else happy. In that sense, these guys don't actually win. You know who wins? The brokerage. All right, this part is what I call the middle ground, and it's hard for me to put this in the pros and cons because it is both a pro and a con, so that's why I kind of created a middle ground here. But this one is the fact of extremely high leverage. Some brokerages will give you like, 1-to-1 leverage, 1 to 3 to 5, 10, 50, 1,000 to 1 leverage and all that sort of stuff, right? That's all great and all, but the thing with leverage is that it's great when it's working for you, and it's terrible when it's working against you. So my final thoughts are basically, I'm not a huge fan of Forex. Not anymore. I started as a Forex trader, but essentially I started evolving more and more and more, and I found that there are so much scams out there, and there's so many pitfalls that you're not aware of, especially regulation-wise, and there's very little recourse that you can actually have happen with you. Whether I'm correct or not in my assertions about Forex and Forex traders, the brokerages and everything or not, honestly, I'm just some schmuck on the internet, I'm not here to get you to prove something to me or anything like that. I'm just kind of letting you know that Forex is a trading vehicle. Everybody chooses their vehicles. Forex just isn't the one for me. But yeah, let me know what you think. Please like, comment, subscribe, and stuff like that. And just remember, just because you're a day trader doesn't mean you have to trade every single day.